If you are holding any of your crypto portfolio on this popular exchange, you should strongly consider diversifying as soon as possible. Hello and welcome back. Markets down again today. That's another score on the board for the pesky moon phase indicator. Still a big question mark over the political situation in the Middle East, and that has suppressed risk assets across the board. As you can see, we're up on the fear and greed index slightly since yesterday to a score of 41, but that puts us still strongly down in the fear zone. Markets are scared, markets are suppressed. We do seem to be finding something of a floor around the 60K region, but honestly, it could go either way from here. I think more downside is likely. That being said, I'm not here to talk about the markets today. I'm here to talk about how we hold on to our crypto, how we custody our portfolio. And it all comes about because of this tweet. Kind of a small account reposting an even smaller account. Jimmy Covide says, "Can you please spread the word about this which Coinbase has implemented? No warning of this prior to purchase will be going to the authorities." So if we zoom in and take a look at what he is referencing, you can see an alert here from his Coinbase account which says, "Crypto sends restricted. As a precautionary measure to protect you against potential loss, we have limited your ability to send crypto until October the 28th, 2024. Please try again after this date." That was posted on September the 29th, by the way. So crypto sends restricted for a whole month from this person's Coinbase account. So that is evidence, if true, of a centralized crypto exchange, and a big one at that, saying, "Hey user, you can't send your funds to this address. We will not let you do that." Now, if you look into the comments, you could see other users reporting the exact same issue from Coinbase. That is very, very worrying stuff and totally antithetical to the whole point of crypto and the whole point of blockchain technology, which is taking control of your own funds and not relying on centralized financial institutions and centralized businesses to control your money for you. Now, if you hold your money on Coinbase, you're not alone. In fact, you are joined by 10 out of the 11 spot Bitcoin ETFs who all use Coinbase to custody the underlying Bitcoin backing those ETF products. Now, this actually comes in conjunction with another piece of news which might have slipped beneath the radar, which is all focused around growing concerns that Coinbase has in fact been issuing paper Bitcoin instead of going out and purchasing physical Bitcoin to back these ETFs which are custodying on Coinbase, including the biggest Bitcoin ETF, which is BlackRock's IBIT Spot Bitcoin ETF. Now, what does that mean? Well, of course, the Spot Bitcoin ETF is supposed to be backed by real Bitcoin. And the center of the speculation is essentially that Coinbase has been offering IOUs on Bitcoin. The problem being that none of that is verifiable on chain, which again is antithetical to the whole point of blockchain and the whole point of Bitcoin in this case. Now that opens up massive, massive liquidity concerns, and it also opens up market manipulation concerns because it essentially would suggest that those ETFs are not backed by real Bitcoin, which is ironically what we're trying to get away from with all of this stuff. Now, things got even more interesting when BlackRock actually demanded an amendment to their agreement with Coinbase, which would stipulate that they could withdraw Bitcoin within 12 hours. So here we are reading from Cointelegraph. The world's largest asset manager has filed for an amendment for its Bitcoin exchange traded fund following widespread investor concerns over Coinbase's on-chain settlement practices. BlackRock has filed an amendment to require Bitcoin withdrawals within 12 hours from the ETF's custodian, Coinbase, according to a December 16th filing with the United States Securities and Exchange Commission. Subject to a confirmation of the foregoing required minimum balance, Coinbase custody shall process a withdrawal of digital assets from the custodial account to a public blockchain address within 12 hours of obtaining an instruction from the client or client's authorized representative. Despite the newfound institutional inflows from the Bitcoin ETFs, BTC prices have been stagnating for the past 3 months. This is partly what prompted widespread investor concerns that Coinbase was buying paper BTC or Bitcoin IOUs on behalf of Bitcoin ETF issuers, hence suppressing the Bitcoin price. Now, to give some balance, Coinbase's CEO Brian Armstrong responded with the following: "If you want audits, Deloitte audits us annually. We're a public company. I doubt our institutional clients want people dusting all their addresses," i.e. in order to prove these transactions were actually happening on chain, they would have to dust their clients' addresses, and it's not our place to share them. This is what it looks like if you want a bunch of institutional money to flow into Bitcoin. As for CBBTC, yes, you're trusting a centralized custodian to store the underlying BTC. We have never claimed otherwise. So this whole thing is very shady, and to be honest with you, it validates some of the concerns that many investors had going into the ETFs right before they were approved, suggesting that this might just give a better opportunity for the big institutions, the institutions like BlackRock, to mess with the markets and take essentially our decentralized financial system back into the centralized realm for their own gain. BlackRock obviously demanding 12-hour withdrawals from Coinbase. One could even argue that they would benefit more from so-called paper Bitcoin because of what we mentioned earlier about the possibility for market manipulation. To be honest, that's not really the point of this video. The point of this video is that This serves once again as a big reminder that if you're not holding your Bitcoin in your own custody, it is not actually yours. If you're not holding your crypto under your own custody, it's not actually yours. And this is a great reason to self-custody. Like we saw, if you're holding your crypto on an exchange, and it could be a big exchange like Coinbase, you might not always be able to do what you want to do with that crypto. Is Coinbase about to go under tomorrow? Probably not, although I would say two things about that. First of all, that is exactly what everybody said about FTX, and we all know what happened there. Now, sure, we could make an argument that the management of Coinbase and the management of FTX are kind of worlds apart, but that brings me to my second point, which is that the whole point of crypto, the whole reason we're here, is so that we don't have to trust institutions, corporations to manage our money. We don't have to trust how good the management of Coinbase is or how good the management of FTX is if we just custody our own crypto, if we self-custody our crypto. And that is my recommendation to you. Self-custody your crypto, ideally self-custody your crypto offline. And if you have crypto on an exchange, you should have a damn good reason for it to be on that exchange, i.e. you need to trade it out imminently. Otherwise, there is absolutely no reason to be trusting your crypto to the whims of a centralized exchange. As always, that's just my opinion, not financial advice. Plenty more to come. Thank you so much for watching. Catch you in the next one. Bye.